Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So we have a market that is trying to continue the big rally that it started yesterday. And again, we are coming off of recent lows where the S&P was down 10% before catching this recent bid. We are seeing today some chatter about tariffs again, some threats on automobiles and other things. So that's making the market a little wary, but we're seeing a lot of the bulls get coaxed back into the market. The buy the dippers are coming in on the momentum names. So we're going to go over this all today. I want to get into the charts. I want to talk about technical trade setups. I want to give you guys analysis on essentially stocks, commodities, crypto, and even maybe some Forex. Maybe we'll look at the dollar today and the 10-year yield. So let's get right into the charts here, guys. Notice this is the S&P 500 tracking ETF, the SPY. And again, we could see that this was yesterday, right? So we had this pretty impressive rally. We were already gapping up. So this was a gap up here. And we rallied sharply early in the day, a little lunchtime, early afternoon consolidation, and then an end of day short squeeze to the upside. That's very common, by the way. Again, when you're coming off of lows on a charts, the short squeeze towards the end of the day is a common theme. Now, after hours yesterday, we kind of went sideways to lower. And then this morning, we were down early. This is about 4 in the morning. We were down early and rallied all the way back up, turning green, small pullback. Look at this trend line right here. This is a trend line I gave you guys yesterday to watch. In fact, even last week, I said, guys, this is probably the first big challenge of the market. Let's look at the daily chart. Where is that line? It's right here. All right. So again, you go to game plans last week over here, even down here. I said, if the market bounces, the first challenge is going to be this trend line. Pre-market, we have already pierced it and pulled back a little bit, but I'm watching this level today as an indicator of relative strength or relative weakness. And again, on the SPY, this is at 575.60 to 75 area right there. So 575.50, we'll call it, just to keep it simple. If we get above this level, there'll be a couple secondary levels, one right here. You can see right here how the lows were right here, and then the highs of these candles go right through that area. That's around 583.65. And if we get through that, we're talking about a retrace to the scene of the crime up here. So again, what I'm doing now is giving you upside targets of where to look for a pullback potentially. Now, if we get through that level, you look at the next level. That's just the nature of the beast. That's what we look for. All right. I want to go to the QQQ, taking a look at this. This is an interesting chart. You can see I have my fibs on it. We'll take away those for now. So this trend line goes all the way back to December of 2022. And you can see pivot low, and here we broke and we've come back above it. But remember, we've confirmed below it. So to negate confirmation or a confirmed breakdown, we can't just close above it. We must confirm above it. So we got to watch today's price action. Do we confirm a break back above this line? If we do, your next target, I'm going to give it to you right now. See this midpoint, kind of this M pattern right here? That midpoint now becomes your next level. Just above that is a gap fill. So this would be your zone of resistance. All right. Now, in terms of how I am trading this, let's talk a little bit about this. So essentially, I've been unloading longs that I picked up at the lows with members of Smart Money Stocks. Yesterday, we took profits on Tesla. We took profits on some other things in the last few trading days. I'm beginning to look at shorts and not yet on the S&P and the Nasdaq. So again, I am looking to rebuy. We had QID for this fall that we recently had. We had SDS, which are inverse ETFs, 2X on the S&P and the Nasdaq. Now, I got out of those. I've been waiting patiently for the markets to get their reverberation bounce or retrace bounce. Remember, when the markets are dumping, and this is psychological, the markets dump and people get very bearish. Well, once everyone's bearish, chances are the markets are going to bounce, right? Because too many people are bearish. There are too many people on one side of the market. And so what you look for is what we call a retrace, where the bounce occurs and it starts to lure these bulls back in, buy the dippers, all of these things. We started to see that yesterday. I'm not convinced it's over yet, though. but we did start to see it yesterday. So we're getting there on the charts. And that's, again, as we look at this, I'm watching this level. I'm not ready to basically jump in on a short yet on the Nasdaq. But if we got up here, I would start to accumulate, again, looking at a retrace. And then just going to the Fibonacci levels, I want to show you this, guys. You can see that this area right up here, this is the 50% retrace just above that area. So it really gives us a confluence of levels to look at where to start a short position, or where I will start a short position on the QQQ, the Nasdaq 100. Now, does that mean it can't go up here to the 618? No. In fact, look at the 618. Look at these pivot lows right there, the 618 right in that range. So it could always go up there, which is why I always stress to you guys, never think that your first entry is the golden entry and you're going to be right? That's the mistake a lot of us make. In fact, I made it more times than I can count, frankly, early in my career. And occasionally I still make that mistake. Like, let's be fair. No one's infallible. No one's immune to emotion. I do my best to stay logical and use the charts, but everyone gets influenced every once in a while. What I found is when you start positions small, you make more money. Now, it's counterintuitive, right? Because the idea is that, well, if I go all in here and I'm right, I'm going to make the most amount of money. But the problem is we're not always right. I'm not always right. You're not always right, right? Even the best traders in the world, the Warren Buffetts, aren't always right? He's had a few stinkers. Overall, he's definitely one of the greatest investors of all time, but we all have stinkers. So the key is when you start small, you have maneuverability. And so in terms of the QQQ, just looking at this, I say, okay, well, I'll start my first short position here. And if we get to the 618 right here, I add to that. If we get to the 786, I add to it again. And my stop out would be any confirming bounce or move above the high, which would reestablish a new all-time high on the market, right? So again, it would have to confirm above this high, but nonetheless, that would be a level to look at. All right. So I just wanted to go through that methodology there, guys. Again, trading methodology is unbelievably important. It's the foundation of us as traders, right? It's the logic. It's getting away from emotion. It's how you manage your money, money management, discipline. These are all cornerstones of being a great investor or great trader. Okay, so let's get into a few other charts here. Tesla is on my radar. Take a look at this, guys. This is kind of interesting. So this parallel I found is actually using during market hours. So here's this was Friday. This was Monday, yesterday. And this is coming into today, would be over here. But look at this parallel on Tesla, how it's even with after hours and pre-market data, it's giving us a trend line to watch. So what I would say to you, and this is something I'm going to be watching with my Apex Live day trading room today, is that if this line breaks at around 280 to the downside, this is where you get a bigger fall on Tesla. Okay. Now, if this holds, we could just continue to chop down, up, and stay in this parallel channel. But again, finding these things are very important for me as a trader to potentially have good trades for the current day or for tomorrow, let's say. Now, one thing to keep in mind is that we have to always remember that levels can be negated. So always have an exit strategy. Remember, don't go all in. I don't go all in on any of these levels. I start with a small position. If I'm right, I make great money on my first entry and I say, wow, that was an easy trade. If it's not, I have maneuverability and I can usually turn a trade that goes against me by using the technicals to be in a better scenario and eventually make money. Occasionally, I'm not able to, and I have to take a stop out loss, just the nature of the beast. All right. So we're going to watch this. If we flip over to the daily chart on Tesla here, let's go to this. We can see this is that parallel there. It's kind of wacky because it's now showing on the daily chart. Let me just get rid of that. There we go. So Tesla, again, a little bit of a short squeeze yesterday. Again, the stock is higher today, although there was some data that came out on Tesla in the overnight that showed European sales slumped 40% in February. So again, this is the kicker, right? If Tesla rallies, and I did unload my long yesterday, right? And you might say, well, why did you unload it if it maybe goes higher? Well, because at a certain point, I just want to grab the money and run. I mean, we're playing with a hot potato here. Now, if Tesla gets up here, that's where I start to think about a short, right? Pivot low, goes up into this level. We pull the trigger on a short and look for a retrace swing trade. And again, remember, I'm a short-term trader. So I always want to reiterate that, guys, is that what I go over in the game plan is literally valid for today or maybe the next few days, but it's always subject to change because the charts are always moving, right? And so, these people, and occasionally people, when I do my interviews, right, I go on these different shows, I go on some big shows, and they all say, well, where is your target for 2025 end of year or 2026 or whatever? And in general, I say, well, I think it's here, but the longer you go out on the time frame, the more there's too many ancillary factors that are going to make you potentially wrong. And so the best analysis you're going to give is always analyzing at this second or at this day and looking at where this could be in the next few days, because the least amount of things, right? I mean, you give a target on the S&P. Let's say all these analysts are like, oh, I'm raising my target on the S&P, or oh, I'm lowering my target for the end of year S&P target. And it's like, yeah, okay, that's if everything stays the same based on now, maybe. But we could have a recession, we could have more tariffs, we could have less tariffs, we could have a new war. I mean, there's so many things that can happen over the course of a year that is very hard to give targets. And always remember that, guys. So when these analysts come out and give you like, I'm going to upgrade this stock to a $500 price target, always take it with a grain of salt. And always remember, folks, I'm a true believer in this, that these upgrades, when you see an upgrade at an all-time high, it's usually marking a close to top on the stock. And the reason that is number one, analysts are emotional human beings. They're not traders. Remember, analysts are not traders. They're basically John Q. Public with really good education, maybe. I mean, maybe. And so they're being influenced by emotion, just like everyone else. And so when they see something running up, they're like, oh, man, this is going to go to forever, and I'll upgrade it and all this stuff. And you also have to just take that with a grain of salt. And like human nature, when all the analysts upgrade a stock, it's usually marking the top. Like too many bulls are on board. Just like when the markets were at their lows about 2 weeks ago, it was too many bears were on board. In fact, we saw some downgrades in S&P price targets from like Goldman Sachs and all the rest of them, right? So you could see the emotion. And I want to be clear on this. Like most analysts and even most hedge funds are no better than you or anyone else. There's a few select that have done the work, the traded, like me trading live for so many years, where again, you get this understanding of the market where you can make these educated inverse calls that are usually right, but that's neither in the here nor there. Let's get back into the charts. I want to show you this APP chart. So APP is on my radar for a potential short, not yet, but I always look ahead. I game plan essentially for the next 2 to 3 days, let's say, if it continues up. Now, looking at this chart, where would you guys think you would be a short player, right? So it came down. I actually bought it with members of Smart Money Stocks down here. We had a great move up. We took profits. All right, we're out of it. Awesome. We made money. Now, if it continues up, where would your level be? Well, let's do a case study here. And again, I'm saying this and asking you guys because the hope is that you guys are looking at these charts and starting to put the pieces of the puzzle together as I'm teaching you. Now, the first thing is I'm like, wow, look at this monster gap right here. If this price gets up to gap fill, that's got to be a level. All right, I say, oh, I have one factor. Remember, guys, one factor, 60% win rate, maybe 55%, not that great. But let's see if we can find some more factors. What do? Well, we say, okay, well, what if we extend this trend line out? And then we say, wow, look at all this sideways chop here. This was definitely a level where it popped on earnings, then it came back in, and then it gapped. This is called a river theory because it gaps or it takes the bridge over the river, and it continues down. So now you have consolidation plus gap fill right there. Okay, so I could make a case for 2 factors, but I want 3 factors. And again, 3 factors, does it guarantee me a win? No way, but at least it puts the odds probably 75, 80% for a pullback. And then I do my fibs, and I know it's hard to see. I apologize here. But right here, see this line right here, just above the gap fill? That's the 50% fib retrace on Applovin from this high to this low. Now I have something to work with. Now I have a high probability setup where I can say, okay, this could now be a multi-factor resistance that if price runs vertically up, I then would expect a pullback on price, right? So again, if price goes up here, we know that this is a factor. And again, I always want to impress upon you guys, just because it's 3 factors does not mean it's invincible. It means it's a very high probability. But remember, even at 80% success rate, all right, there's still a 20% chance that it blows right through there and just continues to go. There's always that chance. And I say that because, there's too many people out there that are like, always like, oh, this is the best level ever. It's a no-brainer, right? I mean, high percentage is really the best you can do. And there's always a percentage time. Remember, 80% is still 8 times out of 10, which means 2 times out of every 10, it's wrong. And if you're not prepared for that to be wrong, then it means you're going way too heavy on your positions. I always look at it like, let me dip my toe in the water. Let me put a couple toes in the water, but I'm not putting my whole foot in the water on the starter position, because if I'm wrong, I get handcuffed. And handcuffed, remember, is the worst thing that can ever be done, because once you lose maneuverability, the market controls you and you have nothing to do about it. You basically can exit the stock or the trade or just stick with it and pray. And praying is not a valid investment tactic, we'll say. Okay. All right. Let's go through a couple of these other ones. I'm keeping an eye on Palantir. By the way, look at this line here to here is parallel with this line. I love parallels, guys. Parallels are key. And again, very clearly parallel lines. So it tells us that's why you got the bounce right there on Palantir. There's a gap fill for a day trade today at 101, maybe, yeah, just above 101, 101.40. That's going to be a level. Notice again, right here, this is key. This might even be a swing trade level at 101, but a little higher risk, maybe a starter position. Low here, low here. And then if it goes up here, where would I add to this position? On the short side, right there. Now, some people would say, oh, but Palantir is the most amazing company in the world. Remember, guys, that's emotion. They might be a great company. That doesn't mean that their stock price won't go down, as we saw just recently. And again, I pass no judgment on whether a company is good or bad, or whether they're the most amazing thing in the world. All I care about is this, the chart. The chart is what tells me. This could be a chart of rocks. Like if rocks ever got charted and people were trading rocks, all right, we'll trade it the same way as if we were trading Palantir, if we were trading Tesla, etc. Because human emotion is what rules this chart. That's what makes this chart work. And human emotion does not change. Always remember that. Human emotion doesn't change, whether it's rocks, water, electricity, Palantir, Tesla, Apple, Bitcoin, Ethereum, whatever. It doesn't matter. It's still emotion. And emotion means that people behave in the same manner. Unfortunately for us, maybe fortunately for us, the way we behaved 1,000 years ago is still generally the way we behave. Fear and greed. And that's why charts work. All right. And again, remember, when I say work, I don't mean they're invincible. They work a majority of the time. Always remember that. All right. AMD is a cool chart. I just want to show you this, guys. Downsloping trend line. I actually put this up as an article back here when it was hitting on the financial news on the homepage of Verified Investing. And you can see right down to that line and look at this bounce from basically $95 back to 114, 115. Pretty cool stuff. Meta's getting a bounce here. Look at this long-term trend line. Perfect down to the trend line, getting a bounce. Where does this become a short? Number one, I'm going to do my fibs. And there's our fibs. I would probably look at the 50%er. It's also right in this lower level. So around 660, 658. Maybe I would start nibbling on a short trade on Meta and then again add at the upper levels. Bitcoin is up fractionally on the day, just slightly here as it's pushing up just a little bit. Again, we have a downsloping trend line that is on my radar right here. And again, notice if we look at the chart, this takes this high here, and this high here. That's where we get that trend line. So if we push up, there'll be a little resistance around 89,500. If it gets through that, resistance at around 92,000. For this level to break, which again, look, all over here, support, 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 and support, broke, then resistance, resistance. And again, you'd have to assume it's resistance until or if it gets confirmed above. If we confirm above, not just a close above. Here was a close above, and it was a rug pull. All right, remember that. Closes above. Once you confirm below, you must confirm above, or it could be a rug pull. It could be a fake out by the institutions, or just momentum, or panic, or greed, or fear, whatever it may be. Once you confirm, it doesn't mean it can't reverse. It means the probabilities of a reversal are lowered. So these are your levels on the upside. Levels on the downside remain intact right down here. We have yet to actually test this level down here, which goes back to your previous all-time high zone right over here. Gold today, small bounce on the daily chart. Again, we've had 3 pullback days in a row, small bounce. I'm still looking for significant, well, not significant, but a little bit more downside here. If that gets broken, your next level, 828.50, and eventually 2780, 2790, somewhere in that vicinity. Silver today, remember 2 days ago on Friday, it bounced off this level. It's getting a small bounce. That's nice. We'll see if it can take out this high and test this high at around just below 35. Don't forget, my favorite metal remains Palladium, guys. Palladium, again, stuck in here. But look at this. I want to show you guys this because this is pretty cool. So if we look at Palladium here, we can see that, or if you could take this high and drag it down, this is what I'm paying attention to. How cool is this trend line, guys? The high from all the way back in 2022 connects perfectly to the high here in October 2024, connects right through here, consolidates, breaks down. Now we break out, and this to me, folks, is a bullish breakout. All right, I am long Palladium. I by the way, for those of you that don't have a futures account, I use the PALL. It's an ETF that tracks Palladium. So again, I know a lot of you guys don't probably have futures accounts, PALL, but I like this. Again, to me, it's, you look at the Palladium to gold ratio here. Let's do gold here. Let's see if we can bring that up. There we go. Palladium to gold ratio. Look at this. Look at how low Palladium is versus gold. So what I do is I always look for catch-up trades, right? I'm saying, okay, what doesn't make sense logically that could be in play? And listen, again, I could be wrong. I've been wrong before, but Palladium to me at these levels and has not run, and then gold's all the way up here. If you ask me, would I rather at these levels be long gold or long Palladium? I'd rather be long Palladium. It's just beaten down like crazy. I mean, even silver's run, and Palladium is 20 to 30 times rarer than gold. And again, it still may not run, but I'm willing to take that chance by going long on Palladium. Next up, let's take a look at oil real quick. Remember, I've been continuing to say we should bounce on oil, maybe getting back to this area. Notice up day again, so we are getting that bounce. I am considering a short if we get to about $70 a barrel on oil. Natural gas real quick here, folks. I got to get going in a minute to the trading room, the Apex Live Day trading room. And what we can see here is topping tail, drop, support, bear flag, drop. And today we're just fractionally up, but I still think we're going lower on natural gas here, maybe touching here, 378. And then if that gets broken down to about 332, I continue to be short natural gas with members of Smart Money, Commodities, and Miners. But I did take half off the table for a small gain already just to protect. I had accumulated a bigger position than I was comfortable with, so I took half off for a small profit, letting the second half run here. All right, guys, listen. It's been a good game plan, lots of information, lots of education, lots of chart analysis. That's what I want to do here. Verified investing. You guys know it's about logic, discipline, and technical analysis. All right. I leave the narratives to the mainstream media, the hype to social media. I want this to be our safe space where we come for logic and directional technical analysis. All right. So I do thank you guys for tuning in. Of course, I'll be back for trading the close today at 3:55. We'll see how this market goes. You guys have a good one. Take care.